Welcome to this episode number 58 of Your Next Trade, called today Game of Chicken. So if you like what you see today, please subscribe to the channel, put a like or put a comment. Let's start with the Game of Chicken with the best of them all, which is ARM. So ARM was IPO'd last year, on September 2023 at the price of $50. It moved around the $60, $70 for quite a long time. And over the last earnings season, it moved literally from $80 to above $130 and reached $160 something. What is clear with ARM, it's pretty much the same story as what we have with many artificial intelligence stocks with semiconductors. Is a rush for many market participants to very few names. So market is driven by those very few names. It's even more the case for ARM, where the IPO was done with only 10% of the free float. So the shareholders, the main shareholder, is still holding 90% of the stocks. And what you do have is normally 6 months after an IPO, the existing shareholders are allowed to be selling more shares. So this is the end of the lockup period. So in this game of chicken between semiconductors trying to find the peak and the end of this bubble-ish situation, you could have, starting from Tuesday, so as you can see here on Tuesday, this is the end of the lockup period for SoftBank, which is the main shareholder of ARM. So you could have literally some of these 90 million shares that are owned by ARM that could be going into the market. So if you're thinking about, looking at drivers, ARM is one of the best of them all. Everyone is looking at it. The reason is there has been a massive short squeeze on a very little float. So you're going to have, if you want to borrow shares, it's very hard to borrow those shares and the cost of borrowing is pretty high. So that makes this game of chicken. So market is trying to time when ARM will be selling, or should I say SoftBank will be selling some new shares. And in the meantime, the stock keeps on going higher. But in terms of catalysts, you do have this big catalyst for the sector, for this industry coming for this week. So how the different assets have been doing for the year so far. Still the same picture as of that we have from last week, which is 7% from the S&P. For the Nasdaq. Japan, very, very strong, double digit, close to 20%. Currencies, a lot of noise, but not moving too much. It's a 1 to 2% trading range. Crypto up 60% plus for both Bitcoin and Ethereum. WTI trending around $77. We went above the $80, so that's something to be watching, but to be monitoring. But for the time being, we are still trading about 75.80. What I'm interested now is the week-to-date asset performances. So in terms of risk profile, we are still into the Bitcoin ETF inflow. So we see a lot of inflows going into the ETFs names, which creates demand. And mechanically, you do have like Bitcoin now trading around the $70,000. What about stocks? So the picture is a bit misleading because you want to believe that, we are almost flattish for the week, where actually we did have quite some volatility for the week, especially yesterday with the NFP number. So the market, as we're going to be talking, reversed a bit 1 hour after the open on Friday. But overall, the picture is more or less the same. What you can see on the currency side is we saw a bit of weakening of the US dollar across and versus most currencies. So it's not only versus the euro, that is really across all the currencies. Japanese yen now trading around 147 level. That is a important level because we've not the 147, but we are going from 150 to 147. The Bank of Japan is now expecting to be raising rates and to go from those negative rates to policy that they have been doing for years. What about the year-to-date industry performance picture? Is still the same. Semiconductors leading, solar here, and you're gonna see the same S&P around here, so very few winners versus the losers. We discussed that over and over. Week to date industry performance, so S&P flattish roughly here. You have many more outperformance for the week, and really what has been struggling for the weekend, and those are this is the US consumer. We are talking consumer discretionary and we are talking retail. Keep in mind that, again, the US GDP is made of 70% of the US consumer. So when you do have like retail, when you have consumer discretionary that is underperforming the overall market, that is a sign that the market is actually pricing a bit of slowdown of the US consumption. Why is it important? Because on Thursday, we're going to have the retail sales, which are expecting to be up months on months, and that is important because if we see some slowdown of the US consumer, then that will have implication for the GDP. Sectors performance, looking here, this is the same. You see consumer discretionary and IT, especially IT, underperforming the market. That has been really driving the market higher. So the leaders were mostly coming from technology. What about the rates? This is the one that you'll be looking at. This is the column that you want to be looking. It's the week-to-date move in the US 10 years, and that is true across the different markets. Minus 10 bips, we are now at 4.08. You remember or not that we went above the 4.2%. We reached 4.3%. The reason is pretty obvious. We had both Powell on Wednesday and Thursday, who was quite dovish, saying, the Fed is going to be cutting rates. They have been pretty vocal on saying, that they will be cutting rates this year, probably 3 times. And similarly, the ECB said, we're going to be cutting rates in the next 3 months, probably. Why? Because our expectations of inflation in 2024 have been coming down quite by a long margin. What is the translation from the Fed fund rate? Actually, a lot of noise for the 10 years, but in terms of expectations for the FOMC, it's more or less the same. The first cut should be expecting around June. You see the differential between 533 and 510, that gives you 23. So that gives you your 25 bips cut. So first cut in June, July. Okay, so that's the July. So that's June, July for the cut. And overall for the year, you should expect those 3 to 4 cuts. But week on week, not much of a change. What about the VIX, the volatility? So we are at 14%. A bit of a jump in the volatility over the last couple of days. And actually, if you look at the internal of the market, in terms of single names, there has been more volatility than usual. So if you have been actively trading, there have been quite a lot of opportunities over the last week or 10 days. So let's jump into the technical analysis. We could be actually starting with NVIDIA, looking at the weekly chart. And here you're going to have a logarithmic chart just to give you the picture in terms of change in percentage. And as you can see, weekly we have been making many green candles. A bit of a rejection that was yesterday. So yesterday during the session, you see there has been a big move. So we opened around this 950 something. We went into 974 and we closed at 875. So there was a reversal yesterday. I'm not trying to call the top. What I'm trying to find is always the leaders, the drivers. What is the market made of and what is driving this market? Pretty clear yesterday, 1 hour after the open, that the semiconductors. So if you do a daily chart, can we do something like this? Let's do a 15 minutes chart on NVIDIA. You could probably see that NVIDIA started to turn after 1 hour. So we put that in the Discord community. That was actually some easy trades. You don't need to be smart, but intraday there was 5 to 10% to be made. I played on AMD. I didn't play NVIDIA. I play AMD and the S&P futures because when it turns, that means the overall market will be moving and turning. So what about the picture on the weekly basis for the S&P futures hop? Let me do this. We are still above this trend. We have been, kind of extending this trend. Again, picture is still very aggressively on the way up. Green candles, we are talking 16 to 17 candles out of the last 19, so very much strong. But what you can see is there has been more volatility. The candle from the top to the bottom is much wider. It's even more true for the Nasdaq. So Nasdaq, you can see this red candle. I'm not talking about or calling a top, but there are some signals as of yesterday that there have been some changes. Russell picture is the same, but you can see the candle as well, indecision going forward. I'm interested now into the gold. So gold making new highs since we broke the 2080. We have been like boom, we went one shot. We are up 4 to 5% on the week. Nvidia, as I said, you could be looking at the SOX index. You can see this big candle and a bit of a rejection. So this is for the technical analysis. I want to move about what has been going on for this week. So as always, looking at the S&P over the last 5 sessions. Not much, trending lower in low volume on Monday and Tuesday, but pretty much what we were waiting for was for the Powell that was coming on Wednesday. We got the ISM manufacturer services that came on Tuesday. The headline number was a bit lower. If you go into the details, actually the sectors are doing a bit better. Employment was not great. Inflation was still pretty high. So kind of the same story. Thursday, what you do have like the ramp coming on any Thursday. And why I'm saying that is since the start of the year, if you look at the S&P, 60 most of the time S&P has been up on Thursday on the expectation of this OPEX or this option expiry for the week. You do have like options that are driving the market higher, where people are expecting both Thursday and Friday to be doing pretty well. What was interesting from this week is actually we had a reversal on Friday yesterday based on those summits turning a bit. And I think a lot of many people get caught being long going into Friday, especially in the semiconductor. So look at the volume. This is something to mention in the Discord community. If you want to look at the leaders, you want to be checking if the volumes are abnormal. Pretty early in the session yesterday, you could tell that both AMD and Nvidia will be trading much more than usual in terms of volumes. And AMD was pretty significant. We were talking 20 to 30 million shares more than usual. And if you want something to be happening, you need those to be happening in big volume. So overall, check those volumes, check those option expiry. And if you look here at what has been happening for the week-to-date performance, so the S&P is flattish, but there has been a lot of it's a bit misleading in the sense that there has been volatility, quite an internal volatility and between sectors and industry. So if you look at the most recent winners, we are talking about Costco, for example, we are talking at Abercrombie, even Nvidia with no results. The first two, Costco and Abercrombie, came out with the results and were quite punished. I mean, you can argue that they had a massive run. It's true for Abercrombie, which went from 20 to 140 and closed at 110. Costco, same as a massive move, but you had at least some profit taking on those names. What about what are the catalysts going into this week? So we do have like some inflation with both the CPI on Tuesday and the PPI on Thursday. For the CPI, how the S&P reacted recently, kind of the last one was pretty bad. We went down 1.4%. So more recently, we know that the surprises on inflation have been up, and the market didn't like it that much on the day. Then it carried on. So looking at inflation on Tuesday and Thursday, retail sales on Thursday, it is important, as I said, because for the week, the retail sector has been pretty weak and consumer discretionary as well. We will not have any Fed speakers because the Fed is in blackout period, as we do have like the FOMC meeting in 10 days and the expectations coming into those Fed. We do have obviously a big catalyst in terms of market structure and drivers and volumes, which is the option expiry this Friday. For the special situation, you do have like the index rebalancing, so players that will go in the S&P 500. I'm not going to be mentioning the name because you all know which one is going to go. And another catalyst is obviously the ARM lockup ending on Tuesday. So that's for the drivers that we have. As we can see at the bottom here, you have the S&P weekly straddle. Last week it was at 1.1%. As we do have like more volatility coming with the VIX at 14.5% roughly, that gives you a 1.5 weekly straddle. Finally, how the S&P has been doing recently during OPEX week, not much of color. I mean, it has been pretty okay most recently, but we need to keep in mind that we had a massive rally in the markets from 4,200 to 5,200 on the S&P, so very, very strong. But you should expect a lot of volume and a lot of noise going into Friday and on Friday coming here. So this is it for me for the week. As I said, join us on the Discord community. There was some good signals that we gave, but that was for the most advanced people, most advanced channels. If you have questions about the 4x4 video series and or the mentoring, you can send me questions here. And as always, you can send me anything or asking some questions on social media. So this is it for me for this week. Have a good trading week, and I'll see you next week. Bye-bye.